Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have the CEO, Aziz Rahimtoola, back from Sabio Holdings to give us an update. Sabio trades on the TSX Venture Exchange under the symbol SBIO, and it also trades on the OTC under SABOF. It's currently trading at 84 cents with roughly 46 million shares outstanding, or about a $38 million market cap. I'd now like to hand it over to Paul Andriola.
Thanks a lot, Trevor. Great to have Aziz back. I had you back here, I'm going to say about 6-7 months ago. I've actually lost track of how long it was.
Right. Time flies when you're having fun, Paul.
Yeah, exactly, right? It's been a great last 6 months. Yeah, exactly. Great to have you back. And one thing that, we're interested in really catching up on is you guys have had a really spectacular sort of growth quarter this last quarter. One of the faster growing counties that we're following right now. So wanted to get you back on, talk a bit more about the business, and more importantly, get an update. But before we sort of jump into that, why don't you remind everybody what Sabio does and what they're all about?
Sure. Well, thank you, Paul and Trevor, for having us on again. It's a pleasure being here. We basically are in the business of streaming TV. And the way to think about it is, a lot of folks are opting out of cable TV. And if you have a smart TV, such as a Samsung, a Vizio, a Roku box, or some of the other ones, you are looking for alternatives to paying your cable bill. Sabio is at the crosshair of that. We are basically one of the innovators in the space to provide three components of that. We are essentially doing, and I'm going to flip, sorry. We have three components, which is our demand side platform, which basically connects with brands and agencies to help them reach audiences on streaming TV and mobile apps. So when I say streaming TV, think of apps like Roku, the Roku channel, or apps like Pluto TV, or a host of others. And that's really where we are essentially playing. So we provide, we have the benefits and the technology to take that inventory, serve out targeted ads based off of our data capabilities to consumers to help them reach, to help brands such as GM, Ford, McDonald's, many others reach their right audience. In addition to that, Sabio provides deeper analysis and analytics to the brands and agencies. So not only are we serving out the ads and helping them reach their key target audience, but we are also providing some insights and understanding for them to reach that. And then finally, most recently in April of last year, we acquired a company by the name of Vidillion. And what Vidillion does is they allow us to launch apps on the streaming space overall. So not only are we now, our core business today and continues to be, our core business is the ability to basically connect brands, agencies, and platforms with the consumers that they want to reach. That's the core business. The second business is the SaaS business, which is our analytics business. And finally, most recently, we acquired a company that lets us launch our own apps. And that information is going to be coming out in the next few months as to what we're doing there.
Fantastic. Okay, well, let's talk about the last quarter and maybe break down a little bit in terms of what's happening, what's happened, and kind of what can we expect going forward? Is this type of revenue growth maintainable, or is this a one-off?
We are having, and I have also with me Sajid Premji, our CFO, and I'll talk kind of high level, and then I'll hand over. But we are seeing, as you can imagine, consumers are not waking up in the morning and saying, I need my cable bill outside of sports, right? And now they have the ability to get hockey and some of these other sports directly via an app. And so we are playing a role in that ecosystem where we're becoming an alternative. So going back to the growth, CTV and OTT continue to grow. So yes, to your point, trailing 12 months of revenue, we're up to $35.3 million. That's up until Q3 of last year. Our revenues were up 75% from the previous years. And not only that, but we delivered positive adjusted EBITDA. So we are one of these few companies, as you pointed out, we're growing incredibly fast. We're in a growing marketplace of streaming TV. And the only pure play, by the way, in Canada, available in Canada in terms of a pure play streaming TV option. And finally, we're doing it by being positive EBITDA and being profitable. So we are obviously, as you mentioned on the market cap, our market cap is roughly about $38 million. And we've already delivered up until Q3, $35.3 million. There is no company in our space or anywhere that is growing at the rate we're growing, that has positive EBITDA, that continues to deliver results and is trading at close to 1x revenue. It's not happening. So yeah, and thank you for recognizing that and having us on here to talk about that. But we see a huge opportunity in terms of, and just give you some further if I may, just give you some visual context. We are in the early stages of streaming revenue coming into traditional TV dollars coming to streaming. There's more time spent now in streaming TV than there is on cable TV in the US. And our 100% of revenue today comes from the US. That just gives you some context of where the marketplace is going. It is continuing to grow, and we continue to really take market share. The market is growing roughly about 22% on an annual basis. As you saw by our third quarter numbers, we're growing at 70% plus overall. So we're ahead. Sajid, anything you want to add to that?
Yeah, I think, that was well said, Aziz. And, as Aziz has spoken out, talking about our market cap, that $38 million or so, that's actually Canadian dollars. If you look at our market cap in US dollars, it's closer to $30 million. And our sales are in US dollars too. So we're actually trading well under 1x sales right now. I think that's a very important point. And as far as it being a one-off, looking at our sales structure, in Q1, we grew our sales 116%, 294% CTV. In Q2, we grew our sales 70%, 106% growth in CTV. In Q3, we grew our sales 75%, 132% sales growth in CTV. So this has been a continuing trend of not only, riding the rising tide of a growing market, but really significantly outbeating that market as well, outbeating that 20% by huge leaps and bounds. And as Aziz had pointed out, we've also generated 1.2 million of adjusted EBITDA in Q3 and expected to be positive EBITDA for the entire year. So we are being able to balance that kind of high growth while being profitable too, and keeping those 60% gross margins.
And this would, obviously as Sajid signaled, we're going to be positive EBITDA again this year. That would signal 3 years of adjusted positive EBITDA straight we deliver. And so there's a track record. We are this tech company that is taking advantage of a growing market that is driven by being a positive, to actually a company that's driven by profits, not just simply the hype of the opportunity.
Mm-hmm. Yeah, I imagine your business is very scalable. I know it is, but give us a sense, like what sort of ongoing resources do you need to add to be able to continue this type of growth, or do you have what you need?
Yeah, that's a great question. And we actually, in our third quarter call, actually even in our second quarter call, we talked about how we spent a lot of CapEx in the first part of the year of even last year, and how that we were modeling, we were decelerating in terms of our incremental cost, cap structure cost. So to answer your question, our average deal size continues to increase. Our revenue per seller continues to increase. So we essentially, going back to the question of what it is we don't need a whole lot to continue growing at this rate. Or we're gaining efficiencies from our current existing team. Sure, we need to add some additional resources as we have to do, but we have actually, at the present time, we have more bandwidth, more capacity than we have in terms of usage. So we're set up to grow without a whole lot of incremental cost to connect with it. Sajid, do you agree with that point?
Yeah, 100%.
Great. And try to give us a sense of the breakdown of the different types of revenue you have. I imagine there's probably some, call it integration costs or maybe licensing fees. I'm really trying to get a handle on what kind of repeatability or recurring revenue do you have within the business model?
Yeah, and so our biggest business model is this bottom portion, which is our direct demand side platform business. And that demand side platform business has a renewal rate for deal sizes of 200 to 300K or more of above 90%. And so if you can imagine what's happening is we are, and that business is where, give you a quick example. We will work with McDonald's, for example, to help them reach a target audience of people who visit a McDonald's at least twice a week. And what we're using all of this great mobile data we have acquired and used and built since 2015 to connect the dots between mobile and TV. And so McDonald's will say, great, help us reach this audience. Here's our campaign metrics. Here's our targeting parameters. Go ahead and run that campaign. We will run that campaign on platforms such as Fubo, on Roku, on Samsung Plus, on Vizio and Amazon Plus and many others. We'll reach those audiences. They will essentially do their own analysis of our effectiveness of our campaign. We will provide additional insights and analytics on the app science side. And so that the cost there, our margins are roughly about 60% overall as a business, 60% plus. That's our cost structure. And the main cost associated with that is two key components, is the inventory cost, because we are now serving out ads onto different platforms. That's number one. The second cost is all of the storage inventory, storage cost of data and analysis. That is our second biggest cost overall. And so that goes into our overall margin profile.
Now, let's sort of split up the different products you have a little bit more. And Sabio, you'd mentioned some pretty impressive growth numbers within there. What's your highest growing product, and what's driving that demand?
Our highest growing product continues to be our demand side platform offering, our app science, and that is where we are providing brands and agencies helping them effectively reach consumers on streaming TV devices and mobile devices. And that is, the likes of, like I mentioned, GM and Ford and McDonald's and many others, helping them effectively reach their audiences on streaming TV and mobile devices. That's really the fastest growing. The second fastest growing is our app science business, which is basically, it's not a standalone. And so because of that, a lot of that is canceled out in conciliation. But really what it does is it provides, we're seeing an incredible amount of growth where clients and brands are interested in understanding a little bit more about their audiences. And if you can imagine, as recessionary talks continue on, efficiency is the key word. And so in that case, what we're providing, Paul, is we're providing brands and agencies the ability to basically understand their spend, make sure it's efficient, and how do they effectively use those dollars, maybe reaching audiences that they didn't even know about that they should be reaching. So that really is, that's our second biggest product. And then as it relates to Vidillion is simply a mechanism of inventory delivery. And it allows us we're integrated with certain apps there from a technology perspective. That business is also starting to grow now. But really the core growth is coming from Sabio on the demand side platform with the app science business showing a lot of momentum and upside opportunity.
Mm-hmm. Now, you mentioned that you acquired Vidillion this past year. What is there other technologies or other sort of businesses you're looking to acquire, or do you think you're done for a while?
We are always interested in keeping an eye out in the marketplace, and specifically as it relates to our app science business. We think there's a lot of great opportunity there in terms of our SaaS model and analytics capabilities that is differentiated. And one of the things I'd like to say very quickly about app science is, unlike the current model, for example, Nielsen will have a 40,000 household home print. Our App Science Insights has a 55 million household home print. That is where mobile devices are flowing through our system monthly, 300 million mobile devices, and then cross-referenced by 110 million streaming TV devices. Cross-reference that gives us 55 million rich audience household footprint. So to answer your question, we see an opportunity to continue to build on that app science capability and the promise that business has. And really the solutions it can provide, we're literally just barely scratching the surface today. So yes, as it relates to acquisition opportunities we're always keeping an eye on. How we can add to that business specifically.
Mhm. It gives us a sense of the competitive landscape. Like, you're obviously not the only player at the space. Who are you up against, and how could you describe that competitive landscape?
Yeah, and there's a few key players in the space that we really are kind of compared to quite often. The two, obviously everyone knows Acuity Ads, but Acuity Ads, that's a very Canadian brand. They don't play that much. They don't account CTV and OTT. Streaming does not account for much of Acuity's revenues. So they're not considered in our minds a true competitor in that space. The folks that we do compete with quite often is Roku, which is a pure play, obviously streaming TV. We compete with the Trade Desk quite a bit. And then finally, we will compete with the likes of Magnite TV. Those three are much bigger competitors in the space. They continue doing well, but we're differentiated in the fact that we're the only ones of those three that are bringing rich mobile data to understanding TV behaviors. And the fact that we have one of the most complete platforms outside of Roku from a analytics, with something we like calling EMV, which is enablement, the ability to launch apps, monetization, the ability to connect brands, and these are major brands and agencies, with consumers, and then finally validation, which is app science. We're the most complete tech stack end to end in the space. And it is, I know it sounds a little bit that we're being a little bit hubris here, but we are very proud of what we've built with, a company our size. We have one of the best technology stacks, the most integrated technology stacks in the space today.
Mhm. Fantastic. I want to remind everybody that's listening, if you've got a question you'd like me to ask, please just use the chat function and I'll do my best to ask that question. Let's talk about challenges. What sort of challenges did you face sort of in the last year? And, looking forward, do you have new challenges? What sort of keeps you up at night?
I think the challenge is managing profitability with growth. And that is never an easy task. We want to continue growing at our current pace, but not be in a situation where we have to raise capital unless we really need to. And so managing that component is probably always the most challenging. Sure, we can go out. I believe we could grow even more than 70%. As Sajid talked about our CTV growth just in Q3, we did grow more than 7% of the quarters. It's managing the two worlds. And that really, I think, is the biggest task. And it is, we're literally just getting started. And so we see so much upside, and it's, and that's really, I think, keeps me up at night, is balancing the two worlds.
Mm-hmm. And as investors sort of looking in the business right now, what do you think, what sort of milestones or events or catalysts do you think we should keep our eye out for?
Yeah, and that's sometimes challenging for us because we're working with a big brand. But one of the metrics that we will do a better job of talking about is, as it relates to our revenue per seller or our average deal size, or we will talk about a little bit more about our upfront conversations and the success of that. Those are really three things we're looking at to help the market understand and to help them gauge where the business is going overall. But once again, as you can imagine, we're working with some major brands who really are, we sign these NDAs with them. And so for our, we don't have the ability to disclose commitments with specific brand names around, overall. But we will do a better job of talking about some of the positive momentum. But I think the better way to look at it, just take a look at the growth of streaming and the cord cutting elements of what's happening and the growth of streaming. And if you think about the fact that we are growing above the marketplace, if streaming is growing, we're going to grow above that. So that's a good proxy to also look at in lieu of any data we can share that's very specific. And
I'm trying to sort of think through, are you seeing more revenue on a sort of per customer basis? Like, is the wallet spend increasing per customer, or is it you're growing your customer base faster? I'm trying to think where's that real growth coming from? Yeah, and as of we said publicly in Q3, 70% of our revenue in Q3 came from existing customers, and the rest was from new nameplates.
And so we are not only, we like talking about land and expand. And if you can imagine, we are just scratching the surface with some of these major brands and nameplates. So we get in, we do a good job, we execute, we provide additional solutions and insights and opportunities, and then we grow the business. So 70% plus of our revenue Q3 was from existing brands. Sajid, anything you want to add to that?
Yeah, no, that's exactly the case. Like between 70 and 80% of our sales in third quarter were from existing brands, but we also added a lot of new logos in the quarter as well, and that's going to present a great opportunity for us in 2023 and beyond. Because as Aziz talked about land and expand, we now landed these new logos, and in 2023, 24, we're going to be able to make further inroads into them and expand our share of the wallet.
Mm-hmm. Perfect. Aziz, I've got a question from somebody who obviously knows a bit about your business. The question is, explain the buy side versus the sell side of the ecosystem and the opportunities for Sabio on each side.
Okay, that's a great question. So on the buy side of the ecosystem, we are working with the buy side folks. And so they essentially are in a position where they're looking for new technology partners to help them execute on specific target audiences. And an example of that could be a car company that wants to reach EV users. And their options are they use existing data sets in the ecosystem that have not been validated, or they use our data, our App Science data, which has the ability to look at apps on a person's phone in a privacy compliant way. Location visitation. Are you in high density EV areas? Are you in long commute cycles? That is on the buy side of the equation. On the sell side of the equation, we provide, and that's what Vidillion is essentially doing. Vidillion is providing inventory to sell side companies. And so we're basically selling inventory to them. They're using that as part of their campaigns. We're also now looking at using App Science and providing some of these companies that are on the sell side analytics capabilities, insight capabilities, things along those lines. Sorry, is this box in my way? Sorry. On that side of the business overall. Sorry, this box keeps coming up. Do you see me? Okay. Okay, great. Yeah, and on the sell, that's exactly it. So we're providing more capabilities on that side. So that's how the two sides it. On the buy side, certainly we're providing full solutions end to end. On the sell side, we're providing individual capabilities of inventory and now App Science analytics capabilities.
Gotcha. So I've got another question here, and I don't know if you can answer this or not, but assuming you had revenues from the US midterm elections, when do you anticipate the beginning of the spending for the 2024 US elections? Do you guys track that sort of stuff? Or do you find out sort of when it starts?
I think it's a great question. And by the way, we are positioned well in that category. And we do two categories of political and advocacy. We do the political aspect of it, and we do advocacy. And what we expect to see towards the end of this year is growth in that as we get ready for 24. So yeah, we're excited about 24 overall. Sorry, sure. We're excited about 24 overall, and I think we're going to see some elements of that probably starting trickle in at the end of this year, and certainly next year overall.
They certainly do like to spend money when it comes to
yes, yes they do.
Yeah. Okay. So here's a question: do you think Sabio could be a takeout target? Is there could there be a bullet or a bullseye on your guys' back? There's obviously some bigger players in the space.
That is always the case. Without getting into too much detail, it wouldn't be surprising overall. It is, and I will tell you that at the end of the day, we are, and I know this is something that a lot of companies say, but they really don't care about. We are driven by shareholder growth and wealth. And we do believe, and we're always going to be open to opportunities that come our way. But we have one of the most complete tech stacks in the space. And we certainly do believe that is something that, but having said that, we also do see the growth opportunity ahead. And so we don't want to in any way shortchange our investors by taking some quick profits in the short term. So we think that, like you just mentioned it, the 2024 cycle is going to be historical.
Big one, yeah.
In every measure of that. And so it is going to be incredible. And we benefited from past cycles. We believe we can benefit even more of the cycles. And that's not even not just the presidential election. We got senator races that are going to happen in California. We have various regions that are in place. So, part of, once again, as I mentioned earlier, Paul, what keeps me up at night is we got to deploy resources for growth while balancing and making sure we are profitable, because we want to continue being positive EBITDA, adjusted EBITDA going through.
Yeah, fair enough. Well, speaking more about the sort of shareholders and investors, I believe you've got coverage, right? You've got research coverage? Give us a sense of sort of the lay of the land right now. You're still sort of a sub $100 million market cap company. Who's talking to you, or institutions coming down market? What kind of investor sort of discussions are ongoing right now?
Yeah, and I think what I should be very transparent about is the fact that our challenge, quite honestly, has been our lack of flow overall. As a company, we do not have a lot of available shares in the marketplace, and part of that reason was the fact that we didn't raise capital unnecessarily. We raised just enough to really kind of grow our business, but that also has its limitations. 65% of the company is 64% is inside ownership overall. And so that sometimes, if you look at our stock, you say, well, why is it not being traded more often? That is a function of it. But what we're finding, what we're hearing, especially as we continue delivering the results we have, institutional investors are very interested in speaking with us and talking to us about how do they get involved with our stock, and how they can play in the future of Sabio. And quite honestly, what we say to all of them is, look, we do not believe we need to do a dilutive raise at the present time. We think we know we're doing well. And the idea is we will look at potentially a capital raise down the road that could have more investors participate. But we want to do it where it makes sense for our current investors. Overall, anything, Sajid, you want to add to?
Yeah, I think that was well said, Aziz. As far as our current investor makeup, we do have a lot of institutions currently in our name. A lot of people that Aziz had talked about, they're big believers in our company and our story, and they don't want to sell our stock. And well, that's great, from that perspective. It does create some challenges as far as the actual liquidity in the name goes. But I think that, as Aziz talked about, there is an appetite on our end to further our shareholder base, but we're not going to do any extra financing at a price not dilutive, or it doesn't make sense for our shareholders in the company. We really have to have a purpose to it, such as an M&A acquisition.
Yeah, and that goes exactly to your question earlier, is that we are actively looking, because we do believe, and there's opportunities that we have seen in the marketplace. And when the opportunity makes sense from a growth perspective and a shareholder perspective that aligns with our business strategy, and while at the same time ensuring we can continue being positive EBITDA, that's the check boxes we're looking for. All three have to be in place for us to now do a raise to get some additional capital in.
Fair enough. Listen, we sort of run out of questions. I think we've got a great update here. We always like to give you guys an opportunity to sort of give a key takeaway or something you want to make sure everybody walks away with remembering. What's that key message you want to make sure we all walk away with today?
Well, I think I said it in the last time we did this call, was if you enjoy paying for your cable bill, then we're not the company for you. If on the other hand, you were looking for an alternative for content on your TV, on your smart TV, and as brands are trying to reach you and the younger consumers, and the only option has been YouTube up until now, we are a great solution. We're the only pure play solution in Canada today, and with the most complete tech stack in streaming TV, in AVOD, which is advertising video on demand. So we're excited to continue participating in the Canadian market, and do hope more investors are tracking us and seeing the continued progress we see overall.
Fantastic. Well, listen, you guys, I mean, very impressive growth, and it's something we're always looking for. You guys are maintaining EBITDA positive. Again, something we're constantly looking for. So congratulations on success so far. And you know, clearly we look forward to seeing more of this and keeping track of you guys. We've been speaking with CEO Aziz Rahimtoola and CFO Sajid Premji, Sabio Holdings, symbol again SBIO on the Venture Exchange. Guys, I want to thank you one more time for joining us today.
Thank you, Paul and Trevor. Really appreciate the opportunity to talk about what's going on.